And does that put dollar yen, therefore, on a path towards 120, 125 by the end of the year?
Yeah, I would say that when we reference back to an interview that he did last July, he did mention that yield curve control with tweaks is not sustainable. It's implying that he would rather just remove it in totality. So once he does that, which we expect in the second half of this year, we would expect the JGB 10-year yield to be settling close to about 1 to 1.2%. And given the sensitivity of the dollar yen to the yield differential, that should already bring the dollar yen down from today by about 3 to 4 yen. Now, bringing the dollar yen down to 120, 125 would require the dollar to weaken as well. And therefore, I think this is something that we might not be able to expect in the coming months, given the strength of the U.S. data. But in the second half, when U.S. growth slows visibly and inflation comes off, we should actually get to the 120 mark by the end of the year.
Teck, I've got to ask you, do some CSI, if you could, on the data that just dropped out of Japan, the Q4 GDP numbers. I mean, to me, it seemed like there was good news and bad news. Good news is, okay, they managed to get back to growth after the economy shrank the quarter before Q3. When you break it down, though, the part that concerns me is the drop-off or the miss on CapEx. That has traditionally been a big driver for the economy there. I'm wondering whether or not this is going to make it harder for, let's say it is, Katsuo Ueda, who takes over from Kuroda in April, to exit extraordinarily easy monetary policy.
Yeah, I think the capex would come with structural reforms, and I would say that it is part of the package. If they were to exit the ultra-loose monetary policy and expectations of yen appreciation were to come back into the market, that should also bring in the capex investment as well, because now a lot of companies are still offshoring. And therefore, if there is an expectation that the yen would not be so weak in the next 3 to 5 years, that should actually reduce the FDI outflow that Japan is seeing. So whether or not that number itself would prevent the BOJ from normalizing policy, again, I believe that they have set themselves on a path of no return. Once they gave the market the impression that the current policy is out of sync with the inflation and growth dynamics that we are getting over the coming quarters, it is a matter of time before they should normalize policy, because if they don't, they will simply be absorbing way too much JGB holdings on their balance sheet.